There is a great mythology surrounding the Federal Reserve. In modern history, no institution has been made subject to more conspiracy theories, making up accusations, or having just ridiculous myths surrounding it. And no matter what side of the political spectrum you stand on, there's, whether that be zeitgeist, or Ron Paul, or anarcho-capitalist, or whatever you be, even liberal, there are still ridiculous misconceptions about the Federal Reserve. In truth, the Federal Reserve is not a conspiracy. It's in fact just a central bank that does everything it's supposed to and tells you everything that it does. Now obviously us as Marxists would never take such an unscientific view as to resort to conspiracy theories to explain things. So what I am going to do in this video is explain how the Federal Reserve works, explain that it's fully constitutional, and that it's not a conspiracy. It's just a bank. The most virulent of accusations made against the Fed are made by libertarians and anarcho-capitalists. The crux of their argument is that the Fed is a deviation from their real capitalism. To them, there is no central bank in a truly free market. Otherwise, it isn't free. The problem with their thinking is that it presupposes, praxeologically, that the market is some kind of natural force like gravity or electricity. Any intrusion into it is considered an invasion of a natural force, and thus, since the market is presupposed to be freedom, it is therefore an intrusion upon freedom. There is no critical thinking in their view whatsoever. No matter what, anything that disagrees with them is automatically an attack upon a certain perception of freedom. Here I'm going to take on a lot of the myths that are spread about the Federal Reserve. Now these primarily come from the United States because the United States has the most particularly outlandish and virulent type of conspiratorial theory or culture around it when it comes to the Federal Reserve. That is not to say that these kind of outlandish accusations don't exist in other countries. They certainly do. It's just that its greatest expression is found in the United States. Thus, it is a good place to start when dealing about myths of the Federal Reserve. The fact is, the Federal Reserve plays an important role in society, one that needs to be understood correctly. All these conspiracy theories abound reflect only a lack of knowledge on the subject. For those who lack a true understanding, anything at all could be the answer to their ignorance, regardless of how ridiculous it may be. As the primary banking institution in society, it wields significant influence in the economy. I say influence, not control over the economy. The Fed certainly does not have as much power as many people claim. At best, the Fed's job is to keep capitalism from imploding via its own internal contradictions, which it attempts to regulate. One must keep in mind that it is the Fed's power and actions are determined by the system in which it exists. In this case, capitalism. In another system, the central bank operates in a completely different manner, including policies. There are fundamentally incorrect ideas about the Federal Reserve, and these objectively wrong ideas lead people astray. I'm not talking about some kind of bias, a bias in ideology. Some things are straight out objectively right or wrong, and these misconceptions are what drag a lot of people down the wrong road to give them a wrong understanding of what the Federal Reserve is and what it does. Having said that, let's jump right into myths surrounding the Federal Reserve. One of the most hotly contested ideas is who owns the Federal Reserve? Who is sitting on top? Who does the Federal Reserve answer to? And who has the power in this situation? It is commonly repeated about the conspiracy, the so-called conspiracy of the Jekyll Island meeting that essentially stole the entire country via the central bank, that the evil private bankers all got together and conspired to rob the public of all of its wealth. Well, believe it or not, it's actually not a conspiracy, and it's actually all perfectly explainable. Some people claim that it's a private bank with, frankly, really nothing whatsoever to back it up. And it doesn't even really make any sense. If the Federal Reserve is a private bank, and private banks are okay in the eyes of many right-wing people, then what's the problem? Many people believe that the Federal Reserve is an entirely state-owned bank, which is part of the socialist conspiracy to rob us all of our wealth. This is also not true, because if it did rob everybody of their wealth, then the system wouldn't be able to function, and that wouldn't make any sense whatsoever. If the job of the Federal Reserve was to secretly inject socialism into the country, in the last 100 years, it hasn't done a very good job.
The truth is actually both. It is a hybrid of both public and private aspects. The reason for this lies in the very nature of capitalist banking itself. The market must be allowed to function in a particular way or it simply won't work. The market, however, cannot be allowed to function completely unhindered by regulation, or we get disasters like the Great Depression that cause us to need central banks to begin with. This is one of those aspects of capitalism that bourgeois economists can't wrap their head around sometimes. The market is not a perfect entity. Due to the inherent self-destructive contradictions of a system of private appropriation and commonwealth, a system is needed to be set up to try and prevent them from reaching their ultimate conclusion. Another aspect of the monetary system that nearly all bourgeois economists don't understand is the creation of fictitious value. In Marxist economics, we understand that the credit or promises of repayment on interest or without it are fictitious values because they have not yet been realized. They require the creation of value in order to pay these loans or bets back. When a house is sold, the cost of the house goes into the mortgage and a little bit extra for profit. This debt that is paid for the house is a fictitious amount of capital or value. It is not real, something of substance, until it is paid back. This is one of those moments where money is created upon bookkeeping entry. What exacerbates this process is the fact that banks hold outstanding loans as assets, which represent value on their balance sheets when really there is nothing there yet until it has been realized.
Now, due to these kinds of problems, you needed regulation like the Federal Reserve. You see, previously, the health of the economic system, or at least the banking system, was dependent on the individual health of each private bank. See, what happened was we learned in the 1800s, or the late 1800s, early 1900s, that that's not really a good idea. See, there's a whole bunch of problems that pop up. Lack of regulation, bank runs, counterfeiting, a lack of clearing houses, just created a whole ton of problems that made the banking system completely unstable. Even, some clearinghouses were created, but they were unable to keep up with the rapidly expanding banking system. And because of that, it became very clear that some regulation was actually required.
Regulation was clearly needed to solve these ongoing problems within the banking system. Solutions were set up to address these problems. Most well known are the National Banking Acts of 1863 and 1864, which brought a national currency and some regulation. This did little to combat the bank runs, which were a big problem. Some clearinghouses were set up, but they did not have a large enough reach to take care of the rapidly expanding banking system. Later in 1929, the Great Depression took place that shattered the U.S. banking system right to the ground. Without this clearinghouse ability, a large enough one, the banks did not trust each other. This situation was only able to be dealt with when J.P. Morgan became a kind of central liquidity provider by making massive loans to the banks in New York. Commonly, this is believed to be a conspiracy by the Zeitgeist movement. At this point, it became clear that the system required a national central clearinghouse to watch over and interconnect the banking system.
Now, it wasn't even until 1913, when the Federal Reserve Act was created, that some of these problems started being taken care of. Essentially, now private banks had a place to go to in case of crisis that could help them out and stabilize the system. Even the Federal Reserve today puts out tons of papers on economics and actually gives a ton of information that's very valuable to anybody who wants to understand what's going on in the economic system right now. One of my favorites is the Federal Reserve Bank of St. Louis. It provides a great wealth of information to the public.
On top, there is the Board of Governors, which is national. These people are the ones who create the monetary policy the country follows. They handle the regulation of the financial services industry and monitor the nation's payment system. Underneath them are 12 regional banks, which are owned by private banks. Not all banks are members, only some are. These smaller regional banks offer services for bankers specifically. The very top is a national controlled component, and the lower section is privately owned. This is a combination of the two. This adequately reflects the need for some state control over the market to keep it from collapsing in contradiction. Thus far, this system has worked out the best for the US and many other countries. While these regional banks are owned by private banks, their power over them is quite minor due to the structure of it. One of those structural restrictions is that the shares of the stocks in the regional banks cannot be sold, but they do yield a 6% dividend. This does not provide the banks with absolute control over who leads the banks. These members are obligated to elect 6 of the 9 directors of regional banks, which facilitate their daily operation. In this group of directors, there are Class A directors who are elected by member banks to give voice to the stockholding banks. Class B directors are elected by those same member banks, but their function is to represent the interests of the public. Finally, Class C directors are chosen by the Federal Reserve Board to represent the government. The Board of Governors are appointed by the U.S. President.
Just as capitalism functions in contradiction, so does the Federal Reserve itself. It has both a private and public aspect. Just like capitalism, the market has to be free to function in order for capitalism to function. However, there must be some restriction on it or it will destroy itself in the end. This is reflected in the Federal Reserve itself, the very public aspect to it and the private aspect to it. This flow between the two is just like the market. It has to flow as it wants, but there has to be some kind of restriction or it'll destroy itself. What capitalism is in real life is also reflected in the functioning of the Federal Reserve.
What the capitalist class needs is a largely autonomous body that represents their interests, but can also regulate their own inherent contradictions and competing interests between each other. The failsafe that the Fed supplies overall is a lender of last resort to provide aid to private banks if their health becomes too ill.
From what we have seen, the Federal Reserve is neither a public nor a private institution. It is a combination of both, because those who set up the Federal Reserve, those who work to create the Federal Reserve, realize the necessity of an independent regulator among banks, the financial institutions, and the economy itself, in order to keep the very self-destructive contradictions of capitalism from getting out of control. This is the key point to remember when trying to understand the functioning of the Federal Reserve. There are contradictions in capitalism that will eventually lead to its destruction and leads to periodic crisis. The point of the Fed is to take care of as many of these contradictions as possible. It is the Federal Reserve itself that allows American capitalism to function as it is. Without it, it wouldn't be functioning at all. One of the biggest misconceptions of the Federal Reserve is that it's not monitored, that it's free to do whatever it wants. Now, this is started largely by Ron Paul, who's been running around for a very long time saying how the Fed, audit the Fed, see what the Fed's doing, expose their corruption so that we can finally see what they're doing. And he ran on things like this. He's made countless statements saying we should audit the Fed and find out what they're doing. The truth is actually the complete opposite. The Federal Reserve is audited, and it's audited quite frequently. Far from this idea of it being some kind of monolithic entity that can just do whatever it wants and holds some kind of ultimate unaccountable power in society, it's in fact just like a bank that's made subject to the same checks and balances like every other institution is. Here are the actual accounting mechanisms of the Federal Reserve that allows them and does have them audited. Yes, the Board of Governors, the 12 Federal Reserve banks, and Federal Reserve System as a whole are subject to several layers of audit and review. The Government Accountability Office, GAO, conducts numerous reviews of Federal Reserve activities. The Board's financial statements and its compliance with laws and regulations affecting these statements are audited annually by an outside auditor retained by the Office of the Inspector General.
The board's OIG audits and investigates the board programs and operations as well as those board functions delegated to the reserve banks. Completed and active GAO reviews and completed OIG audits, reviews, and assessments are listed in the board's annual report. Before 2002, the reviews were listed in the board's annual report budget review. The financial statements of the reserve banks are also audited annually by an independent outside auditor. Each week, the Federal Reserve publishes its balance sheet and charts of recent balance sheet trends, as well as provides an interactive guide to the Fed's balance sheet. The balance sheet is included in the Federal Reserve's H41 statistical release, factors affecting reserve balances of depository institutions and condition statement of Federal Reserve banks. In addition, the reserve banks are subject to annual examination by the board. The board's financial statements and the combined financial statements for the reserve banks are published in the board's annual report. The reason why we have this view that the Federal Reserve can just do whatever it wants and has some kind of hegemonic, powerful role in society is because of misinformation that has been put out. The Fed is held accountable. And in fact, was it not Ben Bernanke that was hauled before Congress to answer questions about the Great Recession of 2008? If there was nothing to hold them accountable and no investigative abilities, how was he pulled before Congress? In fact, this information is made publicly. Anybody can go and get it if they just go to the website. So it's very far from this libertarian idea where the Federal Reserve is just some kind of evil entity that's interfering in the market that just wants to destroy things because socialism bad. The fact is, there's great contradictions throughout all of capitalism. Even bankers know that. Even the biggest capitalists in the country know that, and they need a regulatory mechanism. They don't always like what it does, but they recognize why it has to be there. Because if it's not, then the system is going to destroy itself. It's one thing to not like the Federal Reserve. It's quite another to spread deliberate misinformation about it. In fact, I'm not even entirely certain Ron Paul really believes what he's saying about the Federal Reserve. Because very clearly, right here, these are the actual rules. Here's the names of the documents that you can go to see where the Fed is being audited and to see what the Fed is doing. And there's multiple layers of auditing. It is a huge myth that the Federal Reserve is some kind of entity that goes unaudited. It certainly has, and the proof is right there. One of the really big myths, whether you're zeitgeist left or libertarian right, is the idea that somehow a bunch of bankers got together with top politicians on Jekyll Island in a secret clandestine meeting and put together the Federal Reserve with this evil plot to take over the world and rob the public of their wealth. Well, actually, that meeting wasn't really actually secret. And the plan that was submitted that they created there actually didn't get passed in Congress. So that whole bit of conspiracy is nothing more than something that was made up by conspiracy theorists, which a lot of people on the fringe politics group like to take as some kind of big conspiracy. I mean, think about it. You're saying that really high-ranking politicians and the wealthiest of the capitalist elite get together and talk? Well, no kidding. That's called capitalism. It's a bourgeois system. The bourgeois control everything. In capitalism, inherently everything is controlled by capitalists, or is controlled by the market, which serves capitalism. The politics of the system is no different. All politicians are funded by various capitalist interests in some form or another. We really only need to look no further than who funded who in the election to see that they're all relatively the same. These politicians represent different interests among the capitalist class, who are in conflict with each other. In the case of the creation of the so-called Obamacare, where it was the interests of employers and insurance companies that came into conflict.
Since 1907, there was an effort to bring around a central bank, meaning there was an effort overall that was not secret. In 1910, the so-called secret conspiracy meeting took place on Jekyll Island that gave birth to what is known as the Aldrich Plan. This plan was the brainchild of several moneyed interests and their representatives in government. Despite what the conspiracy claims, the Aldrich Plan was actually defeated in a vote in the House of Representatives in that same year. The Aldrich Plan called for the creation of a National Reserve Association, which would be made up of 15 regional district branches, 47 directors pulled from the banking industry. The purpose of the institution was to provide emergency loans to member banks, print money, and act as the fiscal manager for the U.S. government. It also had the idea of allowing the state and nationally chartered banks to be able to own specified stock in the local branch. The plan was eventually defeated by the Democrat Party, which won control of the White House and both chambers of Congress in 1912. Their concern was that the government would have too little control. It was also opposed by rural and western states that feared it would become a tool of bankers to take power in the country, which happened anyway. A large player in the creation of this was the Money Trust of New York City. They were investigated by the Pujo Committee, and a subcommittee and the House Subcommittee on Banking and Currency chaired by the Democratic Representative Archie Pujo from Louisiana. With Democrats running on a platform strongly opposing the Aldrich Plan, they instead offered a series of reforms that would protect the public from domination by what is known as the Money Trust. They offered an alternative that was actually quite similar to the Aldrich Plan, but offered mainly more control to the government. In the end, a plan very similar to what was put in place. The spirit of the Aldrich Plan survived, but not in the totality of the power it wanted. The final Federal Reserve Act was eventually pushed through. What this did was it substantially altered what was originally offered. What the banks wanted was a huge free hand to do whatever it is they wanted with all the power necessary to save them from their own greed. What they got instead was regulation putting a leash on them. They got the kind of safety net, but not the complete one that they wanted, with a bunch of restrictions placed on them to try to avoid those problems to begin with. No one denies that the banks have a good deal of influence over the money system, or that they have a good hand in the creation of the Federal Reserve System. It is not, however, a conspiracy to take over the world and rob the public of all their wealth. This is the capitalist system. Capitalists have their hand in absolutely everything, and it is their system after all. However, rational heads prevailed as appropriate restrictions were placed on the industry to keep it as functional as possible. There is far more to fear from capitalism itself than from the Federal Reserve. Unless, of course, you're a president in the 1980s who deregulates the banking industry. One final, very commonly believed myth is that the Federal Reserve is unconstitutional, that it doesn't have the legal right to print money, and that this is a big thing that's held by libertarians, constitutionalists, sovereign citizens, and all manner of people. They believe that the Federal Reserve doesn't have the legal right to create the money in the system. Therefore, any system created by the government is therefore invalid. This has been challenged in court many times. I do not have the time in this video to go into every single one of these court cases and how they turned out. But suffice to say, in every case where the constitutionality of the Fed and the money that has been made always comes out on the side of the government. The state, the Federal Reserve, is fully constitutional. First and foremost, it is Congress that has the right to coin money and regulate its value. Secondly, Congress has the right to regulate interstate commerce. Banking would definitely fall under this power because the law has to decide the outcomes of various legal actions between institutions. Courts have already ruled that banking is an interstate jurisdiction. Thirdly, Congress has the necessary and proper power, Article 1, Section 8, Clause 18, to do what is required to carry out its responsibilities. This includes the power to create a Bureau of the Mint as a mechanism to coin money. Finally, Congress has the power of delegation or enumerated powers to coin money regulate the value thereof, and of foreign coin, and fix the standard of weights and measures. This too has already been decided in a court of law. In the end, all of these ideas about the Federal Reserve, all of the big myths and the conspiracies surrounding it are false. The reality of it is actually quite plain and very boring. It is just a state bank. It's not part of a conspiracy to rob the public. It's not a part of some secret agenda by the New World Order to take over the world. Capital concentrates into as few hands as possible. That's just a law of capitalism itself. That's just what private accumulation does. All the Federal Reserve really does is just regulate the money system because it cannot be left on its own because it will self-destruct, as it frequently did in the past. You cannot have this completely unregulated because it just creates disasters. Every banker knows that. Every state knows that. The Federal Reserve is very far from a gigantic evil boogeyman that many libertarians make it out to be, and the sheer amount of dishonest information that's put out by organizations like Zeitgeist and people like Ron Paul. It is in the end just a state bank. It is made as completely answerable for what it does as any branch of the government does, which leaves that, which is a question in and of itself. But this is very far from the gigantic boogeyman that we're given to try to make us be afraid. This is very far from what Ron Paul, Alex Jones, and so-called anarcho-capitalists give us. It's just a plain, regular old bank, just a regular big fat bureaucracy.